Ladies and gents, good morning, good afternoon, good evening. This is a new episode of Pair Trade Finder Pro, where we are analyzing the pair AEM, HMY, which are the tickers for AGNICO Eagle Mines and Harmony Gold Mining, which are two companies in the mining and precious metal industry. This is a trade that drew our attention as a very good example of a low volatility pair that could produce a very good profit by layering its deviation from media. But let's first explain briefly what layering is. It means that when a pair hits a first standard deviation target, let me show you here, at 2.67, like in this case, we enter the trade with the first transaction. In both tickers, of course, but we instruct the software that if the standard deviate further, let's say 3.0, then we get another alert to enter a second transaction. In our case, that happened here. We're using 10,000 legs for both layers. We consider this pair as a good candidate to increase leg size due to its reduced volatility. But of course, you can make those smaller or bigger depending on your size account and strategy. So layering means precisely what you see here in this chart. First entry ticketed with layer 1 and a second entry layer 2. And if I go to the ratio chart, you can see it more clear here what the motion is. This is the first entry and this is the second entry. That is what we mean by layering, which, as you saw at the very beginning, produced a very interesting high profit. First thing we always do is check news with special focus on earnings and dividends that could have affected the price, as those are red flags we want to deeply take into consideration. So in order to do that, I'm going to Nasdaq website and AEM, so AGNICO Eagle Mines, when the signal was triggered on the 6th of September, there's nothing around that date that could influence substantially the price, so that is clear. AM earnings release happened 27th of October, and as the signal, as already mentioned, was on the 6th of September, we have more than a month and a half for it to run, so that is clear. AM dividends is 30th of November, so that's not a factor on our decision. On the other side, Harmony Gold Mining earnings release happened also November the 3rd, and dividend date was going to happen October 13th, which is more than a month away from the signal entry. And on top of that, this dividend is in our favor because we are long in Harmony Mines Limited. Now, there's something important here in Harmony that we should take into consideration, which is the fact that there was an USB analyst that on the 7th of September, they changed its recommendation from buy to neutral. And that was what made the signals to deviate further up to 3.4, allowing the second layer of our trade to be triggered. The thing is that on the 6th of September, we wouldn't have seen it. But let me just give you a better sensation of how this is working and how it's set up. If you go to System Preference, in Security Groups, this is our slow 60 set, where I have the trade of the month, And this is how you set up these two layers. First layer, each leg is 10,000. Second layer, again, each leg is 2,000. So now if I go to the history of how the price was evolving, what you can observe is that 6th of September, when the entry was triggered, and the standard deviation was at 2.76. And after the announcement of that USB analyst stating that he was going to neutral with the stock, it grew up to 344, which is substantial. And then the second layer of this trade took place. Now, if I begin to translate that into my cheat sheet, I have that the news, I would have marked all of them in green, so news, earning dates and dividend dates. Again, the fact that the announcement of the USB analyst happened after the first entry layer wouldn't be able to see it at that time, so we will have marked this as a green. Per momentum, ratio chart, standard deviation chart, let's go all together with those. Per momentum, and this is apparently looking good to me. It's a very steady line, and the interesting thing is that the standard deviation is well above the media. It normally maintained it on that year. So per momentum, standard deviation, that is a green to me. RSI is at 95, an extremal RSI that points to a highly overbought pair that translates into probability of reversion, so this is a green. Correlation is almost 69, which is quite good, but co-integration, you can see it here. It says 0.58. It was 0.68 last week, but it has evolved. In any case, it's well below our 0.88 standard, and this will be clearly a red. It's a weak integration, so at this point you may think that giving up could be fair. But if you see this graphic, how the curve, the PNL curve grows, and the fact that you have 8 trades and all of them were winners, allowed me to continue the analysis. CAGR is almost 17, and drawdown is 10.5, which is a very good ratio, and this is clearly a green. So if you go again to the spreadsheet, with the exception of co-integration, which again is a big one, we have a pretty solid trade to be taken at the point where the first signal on the 6th of September was triggered. Now let's go finally and take a look to the history on price, and what you can observe is more than $3,300 in just 21 days, which is an amazing 41.8% on margin if a 5-to-1 leverage is used. So that is an interesting one. And with that, the only remaining thing on my side is to wish you very good and safe trading, and see you all in the next episode.